They say that you cannot time the market, that trying to time the market would be a fool's errand. Those might be the same people that tell you a lot of fibs. I am Bagadon at Stockmarketcaddie.com. I can't really put my finger on who they is, but I can tell you who I am. First, today is March 8th at about 2 p.m., a Saturday. For more than 25 years, I taught surgeons how to work with the most advanced surgical instruments of the day. I am not from Wall Street. I am not from Madison Avenue, thank God. I did not come from the financial industry or a bank. I do not manage anyone's money. I do not provide specific recommendations to buy or sell a thing. At Stockmarketcaddie.com, my wife and I mentor those persons interested in trying to do what? Yes, time the market. Trade the market. You cannot control the market. You cannot. I cannot. But you can have control over this part of your life. You get to decide what markets to trade, what interval to trade, how much leverage you want to use. None, a little, a lot. You get to choose whether you want to trade on a discretionary basis, a mechanical basis, or a robot-assisted basis. Yes, we have been using AI functionality long before anyone was calling it AI. You see, we have been doing this since the early 2000s. We, Susan and I. Stock Market Caddy came out of the ground in 2012. Let me show you something. This particular trade manager that you're looking at reflects the Nicholas timing model, a program, an algorithmic program that looks at the underlying indice, the VIX or the fair gauge, and the yield on the 10-year treasury. Back on February 21st, the VIX went long. Maybe you don't know what that means, but usually that means there is fear creeping into the market. As an annual member, these tools are on their desktops. As a monthly member, you get to see this view as well as other views of our algos every night. If a person had gone long the VIX, they'd be up one mini contract, they'd be up $3,330. But more importantly, the Russell on the very same day went short. One mini contract, you'd be up 6,100. The NASDAQ, short. One mini contract, you'd be up 28,990. The Dow futures contract, one, you'd be up 3,200 if you had gone short. And the ES contract, you'd be up 12,650. You would be up a total of 54,310 if you had used one mini. If you had used micros, you'd be up about 5,000. If you had used 10 minis, you'd be up over $500,000. You could also use options, and I want to show you what that would look like. You see, we are diversified in not what we necessarily hold, but we're diversified in what we can do. Let me show you. Now I want to show you something. This symbol here is the S&P cash. You cannot trade shares of the S&P cash, but you can trade options. Let me open this up for you. 30 days ago, approximately 30 days ago, the S&P cash was trading at about 60.90, very close to 6100. And we were getting indications then, as we shared with our members, both monthly and annual, that the market was likely to turn down. So what did we do? We went into the options market, the CBOE. We bought a put, an insurance contract, at a strike price of 60.90 with an expiration date of March 21. Now, we bought more than one. We only have one of these 60.90s left. It will come off on Monday. We paid $10,290. It was a big trade. Now, we have parameters around managing that trade. We would never have lost the full $10,000. We may have lost half, and we did have a drawdown of 2 or 3, but we would never lose the whole thing. The good news is, for us, the market turned down. Now, if we had closed this on Friday afternoon, which we did with others, but we will do on Monday, we will do what? We will sell the put to close. And since the S&P is now trading at 5,770, those people needing to insure their portfolios who are fearful, they're going to pay us $21,700 for that contract. We will have more than doubled our money. The second contract that still remains is also in the S&P. This was another put for March 31st at 60.60. That was the strike price. We have 23 days left. We will probably close this late next week. Same thing. The trade cost us $11,450. If we were to have closed it right now, we can't do that because the markets are closed, but we'll do it soon. We could realize we could sell it for $17,690, nearly a 70-80% return. Of course, if the market continues to turn down, we could capture even more. Just these two contracts will have produced $39,390 if we were to close them at the same time. We put at risk $21,740, but we nearly double our money. I am Baggard at Stockmarketcaddie.com. If you want to learn to trade your game, not mine, not Susan, not any of our individual members, but learn to trade your own, and to do so mechanically, algorithmically, and you want to jumpstart your education, and you want to jumpstart getting these tools like Nicholas on your desktop, please let us know. You can do a monthly membership with Stock Market Caddy for as little as $100 a month. $100 a month. And you would have seen that Nicholas signal back on January 21. If you want these tools and more on your desktop or all of our tools, you can do that as an annual member. Remember, folks, the most valuable commodity of all is time. Not gold, not Bitcoin, time. You can't buy it, you can't sell it. Ask yourself, how much money could you have saved, let alone made, if you had gotten a sell signal when the S&P was trading at 6,100 and protected your portfolio? Our tools will let us know when it's time to get out and when it might be time to go the other way. Markets are not obligated to go back to the highs. They're not. This notion that you cannot time the market is nonsense. It is self-serving nonsense by folks like CNBC, the Contrarians News Bubble Channel. You know what it is. I know what it is. It's fake news. Let us know when you're ready. Be sure to visit Stockmarketcaddie.com. I'm Bagadon. You can call me any day from 9 a.m. to 9 p.m. at 813-758-8263. Thanks.